Is it just a fantasy?
What's up, guys? How's it going? Just give me a quick sound check. I probably have to turn the Amon on Marth off. We don't monetize the streams, which allows us to, what I've noticed, allows us to play certain copyright music. But I said that like 2 weeks ago, and I did a stream, and I played Jimi Hendrix, and then I played the Rolling Stones, and the stream was flagged for the Hendrix song. It was flagged and it was taken down for the Hendrix song, and then YouTube allows you to edit and take out like it automatically picks the song and it pulls it out, and then you could republish. But then the Stones song stayed in, so we always get flagged for everything I do where I have like a song that's obviously copyright protected, but you're not in like any serious trouble unless you're actually trying to like get paid on YouTube. So sound is good. Cool. We'll leave it in the background. The trouble is, you know what I'll do? I'll throw on the DMCA, no copyright stuff. Just because if I leave that on and then it ends up being the case that it is one of the more serious infractions, they remove the portion. So if I have that playing for the entire video, they might just remove the entire video. Whereas if they remove the beginning here, at least I could like update everybody on Twitter and let them know like, hey, fast forward to 5 minutes in. So how's everybody doing? Get started in a second. It's 2 after, so yeah, I had to do an earlier stream. So I have to go with my wife to her doctor's appointment. So it's one of the first doctor's appointment after we found out that she is we're like the sonogram. So that's taking the place of the 1 p.m. stream. But next Tuesday we'll be back at 1 p.m. So sound is good. What's going on? What's going on, everybody? Cool. On the sidelines. All right, so let's get started. You know how it goes, right? None of what I say is financial advice. Strictly for entertainment purposes only. Just my opinion. And if you guys are interested in any of the platforms that we use, that we cover, always feel free to reach out. I have a bunch of people that reach out to me on a daily basis and ask for EXO templates, Quant Tower templates, what platform are you using, and I happily provide all that. So what that usually entails is just messaging me on Telegram. Message me on Twitter first, so you can clarify you have the right Telegram handle, so you're not talking to a scammer, and then I can send those files over. So, and also, before we get started, obviously, I talk about this all the time. Be sure to check out Phemex. So they're currently running, I like to push it whenever they're running some kind of promotion or some type of bonus. They're currently running 7 different promotions, and they also have a bonus as well for anyone who signs up. So using that link, Phemex.trade, that's below, it's pretty easy to remember, Phemex.trade. So we had that link created so that, again, it would be something that is sticky and easy to remember. So all of the alt trading and spot, perps and futures that you possibly would want to trade are now available on Phemex. They've done a lot of catching up to some exchanges like, KuCoin. They have the same liquidity, if not better, than Bybit now. So it's a one-stop shop. I think that kind of covers the intro stuff. Dark mode is better. Can I use dark mode? No, I have a dark mode for one of the charts. Maybe what I'll do is, I was actually just thinking about this recently, changing my template for the stream, for the purpose of the streams. Maybe what I'll do is I'll create a dark mode stream template moving forward. All right, so let's get started. There's a couple things I want to go over really quickly. Obviously BTC, high time frame stuff. Acceptance outside of the range, acceptance outside of the value area. The first move was the most significant. So this is a value area composite for 17-day structure. Value area high, value area low, acting as very clean resistance throughout the duration of the structure. Finally accepted above there. This was a couple days ago. Finally accepted above there. Held it as support. See, it was sold into. There was absorption at the level, and we got that first leg. So when you have a composite built up, when you have an area of balance, really a range that's really nicely defined, and you finally have what are the signs of acceptance through the level. So not just presence. So presence is just wicking above the level, But acceptance might be, for some people might be meaning, it might mean that they are using some kind of time-based acceptance. So it's like, I need to see a 15-minute candle close, or I need to see a 30-minute candle close. Some people use a 4-hour candle close. This chart right here is a 4-hour structure. This chart right here is a daily. So you have all signs of that right here, right? So the trouble is, like, this is time-based acceptance. So time-based acceptance, the tricky part about that is you might have acceptance through other measures, right? You might have what I like to lean on as acceptance as the level being sold into, absorbing any selling, and holding as support. So this is more nuanced, more granular. It's paying attention to the order flow at the level. You might have that acceptance right away and have a significant leg from the level, all in a matter of, maybe 30 minutes, maybe an hour. So if you're waiting for a 4-hour candle close through the level, you might have already had acceptance, but the 4-hour candle that closed through might already be, a couple thousand points off the deck. So this satisfied all measures, right? There was absorption at the level, there was presence, right, from a time-based standpoint. And when you have that, you don't want to fade the first leg. So the first leg outside of, or rather the first move outside of this type of structure is usually the one that you can, act on with the highest level of certainty. So if you have, let's say you have your first 4-hour structure that's cleanly above here, what you would do is ultimately place your stop back within the value area, and validating this setup, right? So if you accept it back within here, the idea would be, you'd be doing what we more or less just did. But it's a pretty cleanly defined trade, and you're looking at, revisiting at least these highs. If this had legs, we were looking at maybe returning back up towards the 35 level. Obviously it rolled. But the idea is you don't want to fade, like you don't want to start selling too early. If you're hanging out above this level, that again, it's very simple. I mean, it's not very simple. I want to simplify it though. Sellers were able to hold this level clearly until this point. So if you're still selling at that point, and they weren't able to do the job, you're fading the first leg, right? If we continue to push up and you're selling at that point, you're fading what is like it's the move that has the highest probability of occurring, right? Favorably. So this first move up. From there, you could start to look for signs of, momentum loss. You could start to look for signs of absorption higher, maybe some types of delta divergence. But now we're back within the range, right? Back within, again, this is over a 2-week long structure. Back within here, we basically visited from high to low, to the value area or as close as possible to it. And now we're kind of just back in the center of things. So this area right here, smack in the middle, is not really an area that's that interesting to me. We're back in, again, we're back at very accommodative prices for both sides. So it's an area that you'll see a lot of chop take place at. It's fair value, right? So fair value means that buyers and sellers really who get involved there don't really necessarily have an edge. If you're a higher time frame trader, you're looking at this chart differently, right? You might be looking at this as we're again at the lows of a multi, this is going on over a year-long range now. So again, this might be the lower end of your higher time frame value, but from a intraday standpoint, not the most attractive area to get involved. Again, same kind of idea as we've gone over in previous streams. Nothing really majorly changes until we're back above this level, right? So it's not a line in the sand. It's the idea that this was a quarter-long, going into 2-quarter-long structure. These were the lows, right? So clearly this should be the most significant resistance on the chart, significant overhead resistance if we're able to come back to this level. Now, there's a lot of people that are probably still holding positions from this level, right? Expecting that this was the bottom and are still underwater spot positions, possibly underwater future positions. So returning back to here would be, again, an area where we would expect there to be supply. This is not an area, though, I want to blindly sell because of that, it's probably an area that's going to be populated with, very simple-minded short sellers that are just going to be blindly shorting or stepping in front of this level, anticipating that the best level on the chart locally should act as, the level that offers the most significant bounce, right, back in the opposite direction. The trouble with that is when you have a bunch of those types of traders scaling in around this region, you start cascading through them, right? Anyone who's strong enough or large enough to push the book, right? FTX maybe, Alameda, we'll just use them as fuel, and then you'll get something that ends up squeezing up much further, and then maybe ends up continuing to fail anyway. But you'd rather see the failure, and I'd rather not step in the way blindly. So I'd rather see, all right, we either poke through here, squeeze, and then lost momentum, and then have some kind of breakdown that's like a backside retest, or we have something strong which actually ends up reclaiming this level. And again, this was a multi-quarter long structure, so this is a quarter and a half basically. So you need to see more than a 4-hour candle above there, right? You want to see that there's some kind of daily presence here. At least we're closing on a daily, on the daily at least, multi-day even better, before saying that things have really changed. Other than, aside from that, they really haven't. What we're looking at on the high time frame was maybe a long opportunity between here. And clearly that the first time at that has failed. So real quick, just focusing on the chart on the right, I still think that these, on the way down, this value area didn't really do shit, honestly. We had basically just a BART. So you have this kind of diamond pattern up here. You had 1 day of balance instead of 2. I said, hey, maybe we're looking at maybe 2-3 days of balance if we're looking at continuation. Instead, we had 1 day of balance, right here, and then a failure and a breakdown. The level that we wanted to see a response, remember, would have initially been right at these lows, right? You want to see that anywhere there was a gap, the extreme of that gap acts as, again, continued support. So that failed right away right here. There was no immediate kickback whatsoever. So once you accept into a gap, it's kind of like just a void, right? There wasn't much friction on the way up, not going to be much friction on the way down. And the next area that we were looking to was, similar to where this took place over here, a pretty sticky area for, again, this was 2 weeks. On the way up, it was sticky. It was sticky here again, acted as support. So, the expectation was that this would possibly act as support on the way down. Didn't get that whatsoever. So for me, this was an area that I said I was going to get really long. I was beginning to fill positions on our way down as we were approaching this level. I ended up cutting the position because as soon as we started approaching here and we didn't, this would be an area where you would expect at least an immediate kickback on the low time frame. And we didn't even show really any response, right? So if I just kind of circle this level, let me go back there. 1 sec. That's what you had, right? You floated above it initially, which is never something I'm going to buy. I'm not going to buy a front run of a level, really ever. This kind of level in particular, a level that's like, it's interior, right? So it's not exactly like the outermost extreme of a high time frame structure. I'm not going to front run that because a lot of times what you'll see is when a level is front ran, it's someone basically propping this up, allowing certain positioning to build before another push is created, and this ends up giving it fuel to move further down. So this level didn't really do shit, right? It looked like it was accumulating some OI right here, began to roll again. It just became obvious that once we were down within here, we were accepting, right? So I went from filling a position to filling a position around here to ending up cutting it, where I said, ultimately I would have had more conviction. But it turned out to be the right thing to do, and I ended up getting short. So the idea is we're back within the structure. If we're accepting back within here, right, and there's no you wanted this right here. I didn't, right? And again, I'm trading how I trade. So if I see something that conflicts with my system, I'm not going to make allowance for it, right? Especially in these conditions. So once we accept it back within here, you're usually just looking at a move from, in this case, high to low. If it's the underside of the structure, same way we did it for the entirety of it, once we accept it back within here, it didn't really take much for us to get to the other side. So just imagine that this structure is like a well, right? And again, if this was like this, and we dipped over the edge, and let's say that edges, as soon as we are able to accept over this edge, what are you doing? You're going right back down into it, and you're going to sort of balance out within here again, which is exactly what we're doing, right? We have a today's structure is far more balanced than clearly what is a pretty strong trending day. So from an intraday standpoint, I'm not really interested in anything right here. What I would look for is this level, right? So the point of profile, the point of mapping out the chart at all, is not to just blindly trade off the level. It's to have an area to look, right? So this is where I'm looking to see either failure, right? So some kind of poke up. Maybe we get something like this, right? Signs of absorption at this level, and then some kind of breakdown. Then I would more confidently short, right? Because then I'm shorting up here. My risk is at least defined into this gap, and then I have something that probably sets up like this. And the idea is it's defined into that gap because if the opposite happens, if we do something like this is going to just do what it did on the way down, right? And we did this many times before throughout the previous range we just came from. We did it many times within the first quarter. So where we just built structures that kind of look like this, and we did most of our business at the extremes, and there was basically just an area where prices were never able to accept until the range actually broke down, and we had more recently that was it looked like this was going to be the first time we accepted within, again, it's kind of what I was drawing, an area that was never accommodative or accepting of prices. So if we start accepting back above here, we accept into this region, you're just going to see that more than likely it ends up covering that again, and you get a test of maybe this naked point of control around 31.6, and then that's possibly right. If we have something like that, I honestly don't think we've put in like the low yet. So what I think is more likely to happen because of this failure, right, and because what we're seeing, there's some similarity between what we've seen in the structure on the way down all along the structure. So this little consolidation, this failed acceptance, failed auction through, and now breakdown back into the range looks very similar to this over here, right? Similar, but weaker, faster. Also less dispersion. So we ended up spending time in this structure again, and then finally broke down. Also, similar to what we have back here. Looks like the first time after multi-week bounce going on a month long that we have acceptance above clear highs, and then it ends up falling back within the range. And it's more than likely when you lose that kind of momentum and you trigger, the longs up here, we break back down into the structure, you still have more stops, that you end up getting something that if you just look at this cleanly, it ends up doing something like this, right? Here's your box. We're at the midpoint, but we're on our way down to the low. So honestly, because of how things have transpired, and we're going into, and this is just a playbook for the next 8 days. We have CPI on the 10th, right? FOMC on the 15th or the 16th, or it's the 14th and the 15th, whatever one the Wednesday is. We have let's just double check that. FOMC on the 15th. Rate decision, rather. So we have CPI on, here's CPI, right? So the 10th. I don't think that this is going to be a positive for markets, right? We haven't seen any positive from these releases at all. We've seen a spike up and then ultimately lower prices anyway. And I don't think it's going to drastically change. Maybe we see that inflation has topped still, right? So inflation has peaked, but I don't think we're looking at any material change. So without a material change, I think we're still looking at selling that's going to come into the market. So I think that the point of this is if we end up coming back above this level, I don't think it's anymore that we're really looking at a really extended move locally. I think that if anything, this might be a good area to again look for the next entry into what is ultimately going to lead to continuation down. So possibly what that would look like if you're setting this up and wanted, I guess, the utmost amount of confirmation, you get something that broke up here, retest to this level, and then you could use the top side of this range again as more or less your trigger, and then you have your stop here. You have a lower high, right? So high, lower high. at that point, two failures above, which is would very unlikely lead to something that ends up moving up at that point. If you're back within this range, you're absolutely looking at, an extended move down to at least 28. And I just think that the chance of that happening is pretty high, given that we have till basically here before what I think would be ultimately more selling pressure coming into the market. So this is the window we're working with. If we were going to put in the leg, so I posted that tweet yesterday. So it's really funny because I basically, what would we call that? We would call that where you're humiliating yourself. Damn, my brain is just, I'm absent vocabulary right now. Self-deprecating, right? I posted where I said, looks like 4 sellers are out of the market. Right after that, like a minute or two after that, I posted where I wanted to get long. But I posted that anyway because that's where I tweeted that, and then the market nuked down. I ended up saying either way that I didn't want to get long until lower either way. But it was just funny because I said that and then the market sold off. What I meant by that was that I think what is more than likely is that anyone that's related to the Luna breakdown, any larger funds, I think that larger funds that are that were trading this, with the S&P, that were trading it, as maybe secondary to what they normally trade, their normal book. I think that they're probably likely, out of position already. And then we're getting closer to a point where masochists, no, I mean self-deprecating. Masochists would be like to hurt yourself. I think now we're just kind of back to crypto participants only. I don't want to say only, but we had a brief period of decorrelation, brief period of decoupling. So signs like that beginning to show up are good. However brief it was like 2 days. The problem is crypto can't, when the S&P moves down, yesterday this happened, when the S&P moves down, it showed back up, right? So it's not like it's completely gone, right? But for like a day and a half, 2 day period, it was kind of like they were disconnected, which is good, right? It's a good thing that's beginning. I don't think that that's a long-term thing. I think it'll be looser again, but you'll need to see that the S&P is, on stable ground, that the NASDAQ is on stable ground. In a market that's in free fall, you won't have that, all right? So brief period where it broke, it's a good thing, but we're not exactly like leaning on that to continue until it shows that it's something that's progressing and isn't just like, a flash in the pan. So my opinion is that we're going to continue to move lower into this low again. I don't think that. I mean, if we look at one thing that I'm looking at, and I consistently look at this, is and one, someone was tweeting something, and I messaged, I retweeted it, and they said something about if QE doesn't come back, crypto is done. That's so stupid. There's so much recency bias when it comes to QE and QT, and it's all the market is focused on right now. We see this all the time. The market gets, really focused on one particular thing. When it comes to the Fed, though, and it's macro related, obviously this takes precedent because this is affecting all markets. But it's not like crypto hasn't gone up before during periods where there wasn't a ton of QE. Since the beginning of QE, you could say that crypto is, birthed in that period. But this is not. It just means that there's not an abundant amount of liquidity to just throw out anything. And so, of course, crypto tends to be something that benefits during periods like that. It's a risk asset. But I think what you're going to see is just capital move from the shit that isn't worth anything to more likely to Bitcoin, more likely to Ethereum. These will capture more of the sort of value investments rather than everything being kind of just spread out and there being this kind of level of abundance with respect to liquidity that we had. So the idea that crypto can't move up if we're not just like printing, I think is just it's kind of silly. Markets will just be as markets kind of would be when they're left to their own devices, and I think it's a new asset class. And I don't really want to talk about QE too much anymore, or QT. It's just become so in vogue. And listen, if it was that easy, all people in crypto Twitter have basically become like macro pundits. It's become more of a conversation piece lately, but really what most people are doing, to be honest, is they found a couple people that really know macro, and they're putting them on alerts, and they're just kind of paraphrasing and parroting what they learned from them. And I think it's really important to understand that even those people get it right maybe at best 50% of the time. So if everyone had it that easy, then everyone would be multimillionaires and multi-billionaires. But it just isn't the case. And macro is the most complex thing to try to synthesize. Um, and if anything, it's a reminder when you start trying to do it, you start getting reminded, frequently that it's really just important to stick to your market, right? To follow the flows in your market. If they're following in other markets' flows, then you're still going to see them anyway. You don't want to be consistently trying to fade the Fed, but that's something that sits in the back of your head, right? You know that the Fed is not accommodative right now, so you don't take maybe as much risk, or you're more conservative, or you're more intraday focused. But I mean, to try to be surgical with everything and hang on every word and every change in the data, it's like you're just gonna fuck yourself up. So it's also important to remember, and then we'll go to some of the stuff I want to touch on that I just cut myself off on. That price leads narrative. So someone didn't really understand this when I posted this, and they were like, "Well, no, crypto tends to move off of narratives." I'm not talking about idiosyncratic narratives that are with respect to one particular asset over another. Right? Where we see these are a significant driver of flows, and it's really important to be able to stay on the narrative, right? Or to be able to identify the current narrative. To identify the zeitgeist or the flavor of the month, or what is currently hot, however you want to put it, skate where the puck is going kind of thing. Keep your eyes on the ball, whatever analogy you can make, or metaphor, right? But that's not what I mean when I say price leads narrative, or narrative follows price. We're talking about where we are in market structure right now, how far we are off the highs, and what happens, right? It's the news follows prices, right? It's not it should be no surprise to anyone who's been around for more than a cycle now, or anyone who's watched CNBC for during the entire 12-year, 10-year plus bull market that we were in. Every drawdown, every significant drop is followed by stories about why it has to drop more, why it's over, why everyone was wrong about their previous assumptions, how fucked everybody is, how screwed markets are. That's all it is, right? And then when markets are moving up, it's the exact opposite. It's, this is the second coming of, crypto's second coming of Christ. It is the cure to cancer. It just being kind of hyperbolic, because as things are moving up, everyone is shitting gold basically, right? It's just going to continue to go up, right? It's changing the world. As it moves down, the exact opposite happens, right? All you're seeing, and because that stuff is what generates clicks, right? That stuff is what generates attention. It's what generates attraction. So no one's going to write anything against that, because they know that it's not where the emotion is, right? It's not where people's attention is. It's not stirring people's emotion, I should say. So, this is what happens all the time, right? At the lows, it's always the worst, right? It's a scam. It's over. At the highs, it's the exact opposite, right? This is going to continue forever. No one realized that this opportunity existed, and this is the one time that history isn't going to repeat itself, and this time is different. Just get used to it, right? So in that sense, price leads narrative. So don't expect the narrative to change and then price to change. Don't expect it to be a series of stories about, or don't expect it to dampen on its own. So it's always, the best way I could put it is, the day before the market bottoms, right? The day before the market puts in its low is always the worst possible day, right? The worst day in terms of press, in terms of what is taking place, expectations. It's always the worst day. The market puts in a bottom and no one has any idea yet. And then after it's points off the floor, then the stories start to change. But it will never be the other way around. It'll never be the case that you'll start to see, oh, the news is getting better now. We should start buying, price is going to fall. That'll never be the case. You'll always go, oh, fuck, it was price that was moving, and the narrative wasn't adjusting, and that was the divergence I should have been paying attention to. It's when bad news no longer, see, I talk to myself so long in these streams and on these call-ins also that I say my sentences backwards, my brain is stopping. There we go. I was about to do it there. It's I'm dyslexic almost. My mouth is really dry, actually. I looked over and I'm like, fuck. I just finished my coffee. I don't have a water nearby. it's when the narrative and news is staying progressively negative and getting worse, but price is no longer responding that you should, oh yes, the night is darkest just before the dawn. Absolutely. Um, that's when you need to start paying attention. The same thing is at the highs, right? Everything is positive. FTX is buying everything. Um, there's magazine covers with Sam, and everything is crypto related on Time, on Fortune. You get the idea. You get what I'm trying to convey. So anyway, back to actual prices. So one thing that has been really actionable, and this is like the market is really PvP right now. You're seeing yesterday there was quite a significant bid on Binance futures, right? Now, this is a Binance margin spot product. I can't remember actually which one it was on right now, but either way, a very significant bid, and the market is really focusing on this entity. It's important to understand that I'm pretty sure it was futures, right? It was here. I'm just trying to remember where I saw it, because it was 800 BTC that got chewed through right away. This just because there's someone who's big and buying doesn't mean that the market has to bottom, right? People of larger size have been wrong in worse ways. So paying attention to a large bid like that, it's something that I think can possibly get you in trouble, especially because it's possible that a significant amount of this is just like, a delta neutral trade, could have been a position closing out, could be someone that's spoofing into a hidden offer. So there's a ton of things it could be, and it's poor to make an assumption that it's just someone who's looking to buy the dip. About this though, one thing that has been the case throughout this entire structure is that significant bounces and significant breakdowns have come after we've seen significant increases in the corresponding open interest. So, for example, into lows, as we're making lows, right? So, for example, right here, this is a high. We have open interest going up, price is stuck in a range, not continuing to move up. CVD was making a CVD divergence right here. It's trapped, right? That's at range highs. It's clearly that all of the effort that was put into actually taking the market somewhere is already stored within the structure. So you get a breakdown, right? The opposite happens as we continue to make a new low or attempt to make a new low, right? Just paying attention to the range. So it's good if I do that first. So trap at the highs, big increase in open interest, right? Trap at the lows, big increase in open interest, okay? Another trap at the lows, big increase in open interest, right? Another trap at the lows, big increase in open interest. And then you finally have this structure that we're able to break out of. We have an even larger amount of positioning that comes in. You can see that a good amount of that unwound. But from where we are now, so into this low more specifically, I just spit on my keyboard. Open interest was depleted into that low. So now we have prices moving up, and you have open interest moving up. It's not exactly like I don't think it's the best case for how I want to get involved. If I'm not long right now, so that's pretty clear. But if I was looking, on the way down, we had little pops and increases in open interest. But what I would want to see before really buying the dip again is a case like this, or a case like this, or just to draw out what it would look like. Imagine that we're going to make a new low towards the low of this range. And as we're moving down, let's say we're left with something like this. Maybe open interest drops from that point, but as we're moving down, open interest goes up. So price is moving down, negative delta, aggressive sellers coming into the market, and them getting into position at the lows, right? And then price basing out, and then possibly being put in a position where they're squeezed or forced to reconsider their positions. So we don't have any of that yet. And for the entirety of this structure, you can see it was on positive funding. So it's not like we saw, there was any kind of sustained fading of this move. There was a good case to be made for it possibly being distribution up here. We talked about that during one of the streams. Spot was aggressively selling while futures were buying. So this was something that was quite perplexing how much spot dropped off, but the possibility was that it was distribution. Funding was entirely positive, right? what you want to see is you want to see something that's sustained on the negative side. You don't want to just see like something like this here and there. Okay, because what has been dominant for a long time is probably the trade that's going to get squeezed. Right? So what has been dominant more locally, the funding that I have right here, it's this. So just to be clear, this is negative funding. This is positive funding. The white line you're looking at, that's open interest. So if you just looked at the structure from left to right, most of the activity has been up here. You have brief period here, right? Brief, brief, brief. But most of the aggressiveness has been against the offer, right? Most of the aggressiveness has been derivative buying. There's been brief periods, like I said, of short-term traps at the lows where there's been some obvious delta divergences. We had the significant increases in open interest that, again, corresponded to that. But this, over the longer span of this structure, it doesn't look like shorts are getting really offside. I mean, just from what I'm gathering, right? And again, you're seeing that things are just completely sold off and easily pushed back down. Mind you, over here, it was much clearer. Right, again, not only in this structure did you have a big spike in open interest locally, but you had a pretty significant delta divergence as well. So again, I think it's really important to remember, right? Just leaning on this again. Nothing really has changed. The entire way down, people are just looking to buy the dip, which is, it's what you want to do when you're trying to make your money back. But not every area is a good area to buy the dip, right? I think the best opportunity came when I basically, I'm not patting myself on the back, but called this live. So bottom over here live. But I think the best opportunity would, again, come back down towards the lows. So the weekly doesn't look that good right now. We have the 200 weekly right around here. So if anything, I mean, I think that would be ugly to get there. But maybe we end up creating more of a bounce. We haven't visited this wick yet, so put it that way. We haven't visited this wick. If we go back to last summer, we tend to revisit those lows. And if it's a bottom, right, one of the things I've been saying is that bottoms take a while. So just hang in there, guys. Like, I think the best thing to understand is that it's going to take a while. We're definitely not in an environment where it's going to happen fast. I mean, the S&P is chopping around today. When it lost 4,095, it looked like it was going to puke much lower, but we ended up finding yesterday's lows. But on from a high time frame standpoint, it's doing the same thing that BTC is doing, but even better actually, right? I mean, if we look at the S&P, I'll take off the weekly profiles. We're at high time frame resistance. So if this is going to bottom, I said this a couple streams ago. If it's a real bottom, I expect the S&P to end up chopping around in this region for some time. I mean, specifically because the environment we're in. Just because it's not you're fading the Fed, right? Mentally, if you're looking for, a bottom buy. Does this all make sense? I'll look at session CVD, but I mostly look at cumulative CVD. Okay, so let's because it's pretty clear, right? I went over BTC. We're back within the range. Not exactly the best area to get involved. Honestly, I would consider shorting a breakdown. So with a structure like this, if we get to failure at this level, right, I would definitely look to place a short around here if we start seeing failure, not just blindly. Because remember, I said you might get that squeeze through here that ends up giving a higher lower high to short. But anything that fails either here or here and accepts back within here, I think is fair game. And I think it ultimately ends up taking us lower anyway. I mean, it might be a case where, depending on the structure that paints, where we get a breakdown like this, and then we're kind of just leaking at the low end here. And then I think that might be a case where I'd be willing to actually sell the low. And what that, oh, you guys can't see that. One sec. That's kind of off the, why is that off the side? Oh, one sec. There we go. I think what that would mean is, let's say we melted down towards this low and we're favoring the entire ranges value area low. After this failure, if we do something like that, I probably would be willing to short into this and just have a local stop, expecting that we puke into, these lows. Or at least expecting that we get something like 28, and that's from like 29.2 to 28, and just have a tight stop, right? When you see like that kind of structure that looks like it's just bleeding down, you can afford to do that. And it's especially the case. So here you had that, right? But we didn't have any kind of similarity to what we have already. So here you had just like a flag building and a bleed. Right? Whereas this is clearly a range that looked like, we have a very clear deviation above it. Now if we have that bleed, again, just as I've said many times before, when you have a structure like this, if you take a side, if you've taken both sides at one point, right? So low, we put in a low, we put in a high. If you start favoring a side at that, after that, so if we're back up at the highs, like above there, like who's fading that, right? Or if you start favoring the lows, it's probably it's going to break in that direction. So the difference is, like I said, or I didn't say this, I should say, if at this point, like we do something like this and we're above this high, don't fade that. If you're making a higher high at that point, yeah, you're getting extension. But the failure that's, possibly right in this region to look for would leave us with a lower high, right? And that would be the short that I mentioned earlier. All right, so as far as alts go, there's a bunch of alts that I'm looking at. And honestly, so FTM actually looks like it might be setting up for a quick short opportunity. Not something I want to take early. Because as you can see, alts are they're well off their highs. Right? So FTM, for example, dropped 95%. The alts that I have that I'm looking at are alts that actually don't have still, and these are I'm looking for larger longs, right, eventually, in alts, because I think that they are battered down. I think many of them will continue to drop. But I think that a lot of them are going to be due for really thin, significant bounces. Anyone who's been here multiple cycles knows that you get those days where alts that should be dead, that are down 95%, bounce 100%, 200% in a day, like in a half hour, because the books are so thin that market makers step out of the way. There's no one providing liquidity. Books are thin. You have a good amount of short open interest built up. It doesn't take much for the market to move back in the opposite direction because there wasn't really much structure left behind. So with my alt list that I have, these are things that the only one that I would be willing to take a quick short in, because I don't want to short alts at this point, is FTM. And that's because we have this kind of, I hate to call it this because I don't like, this is overused, inverse, we have this head and shoulders pattern. Ultimately what we're looking at is, it's a change in structure. There's possibly a transition in this structure. So you had a higher low, higher high, and now maybe a lower high and possibly a lower low that's going to be created. So this usually would lead us to something that bleeds and breaks down and gives you a move back down towards the low. That's really it, though. I don't know if I would want to expect much more than that, because I think, again, alts, there are many alts that they're going to be putting in very significant bounces, I think, in the near future. I don't want to say if that's a week or 2 weeks, or a month is still the near future, right? So the point is, like, at these levels, I don't want to be shorting. Unless it's something that has, a ton of emissions coming in, a bunch of unlocks still, a bunch of supply that's coming into the market. All of the alts that I have right here don't have that big market cap FTV disparity. So they're pretty much in line. So it's almost like the market cap to FTV ratio is as close to 1 as you can find. So all of them are significantly off the highs. And I think what they ultimately would do either way is, so for example, in the case of, this is Phantom's weekly chart. You're not going to make a low in this kind of market right now where you leave just one low. More than likely, you get something that gives you some kind of 3-drive structure, whether you leave a third higher low or a third low just completely. And you want to see some kind of development. This probably would take place over the next, this could take place over a month, honestly. And you get something that starts funneling, has put in, right, what looks like a 3-drive structure. And then at that point, you're back into a really meaty area in market structure in general. So we haven't visited these lows. It doesn't necessarily need to be the case that we do. This is just a really good area where, potentially we could see a platform develop and get that very significant bounce. So I'm starting to prioritize that and make a list for things that I'm just starting to build this list. So I don't have everything on it that I want, but things that kind of fit that criteria. So near, this is 77% off the highs. This is not put in its low yet. I doubt this is put in its low yet. So this is, right now we're looking at the weekly chart, but this is basically into a gap, right? So this is the last area of consolidation. Here's your trending structure upward, consolidate. That's before we started making new highs. So we're at sort of that last bastion of support. So this region would be where I would look to see it develop. If you look at that, it's kind of like, maybe that's an extension. If near is a drop, I can't see that in the near future. Where that's funny, where near's all the way back down here without any kind of bounce in between. So near is one of them, right? Looking for some kind of 3-drive structure to develop. This is where RSI honestly would be very useful. So looking at an RSI on something like the 4, 12, 10, looking for that divergence in momentum to the downside. And also, obviously, I'm also starting to pay attention to order flow a lot more heavily on alts as well. More specifically, Solana is something that I want to capture a bounce on. Solana is right now 84% off the highs. I think we're really close to an area where a lot of people would puke. So it's not here yet. I don't want to buy early. But it is one of those pairs that, and just to clarify what I'm talking about. So we'll look at, so here's a good example. So this is pretty tight. So 3.7, 5.3. Solana doesn't have anything. Right? I mean, your total supply is slightly higher than your circulating supply. AVAX is another one that I want to look for a bounce in. This one has an ugly FTV ratio. So I should say, as a caveat, AVAX does have an ugly FTV ratio. And this is, honestly, I might have mistakenly included this. I mean, we're well off the highs right now, but that next major area of support. The idea is either way. With these, I would not, it's just in this region, it's not an area where I would want to short. You want to be shorting some kind of rally at this point, right? If daily closes green and sold, will be locked in daily bullish divergence. Yeah, I mean, you have that, right? But it's, I don't know. I don't trade really a ton off of RSI. I've used it plenty in the past. At this, being this close to the low, I'd just be suspect of buying. Especially because the whole, I think one of the more important things to just touch on again is that I think BTC is going to be pushing the lows again. So if that happens in the next week, 2, 3 weeks, all of the alts end up moving down further, right? And you can see right now, ETH is suffering against BTC. Everything is suffering against BTC. It's not like we have any real strength against Bitcoin. So even in those pairs that are on my list, it's not like there's any kind of crazy idiosyncratic strength. One thing to focus on, optimism token just released. I would be really careful shorting this. I think that this is going to come all the way back down to earth, but I'd be careful shorting this because the float is really low right now. So the amount on exchange is very low. So this thing can easily squeeze much higher than here. So if you're going to look to short optimism, you need to see days worth of development. So it's like maybe even a day's worth of a double high or a double top, at least on the daily, some kind of really strong failure. This kind of chart, honestly, it might make sense to look for some type of pullback that, you know, freaks out enough people where you get a good amount of puking, but then again, this is something that probably is going to be putting in a significant high, regardless of the fact that it'll probably all end up back down here inevitably. It's just a really poor time of the cycle, in my opinion, for this to expect this to have like legs beyond everything else. All right, so let's see. Is there anything else I want to cover? There's no like really local. We haven't had a good local, you know, intraday sort of textbook setup lately with what am I thinking of? Inside day structure. So we don't have anything close besides value. The area to reject, if we're looking for possibly failure for this to squeeze up a little bit more and then end up still coming down, we have single prints between 30,006, 30,005. So right here are your single prints on the chart. So this is where you would want to see that final exhaustive push. Or no, I shouldn't say where you would want to, because you could get something all the way back up here again, like I said, that leaves you with a lower high and then gives you, you know, something along the lines of this as a setup, right? Back within the range after creating a lower high, which makes this all the more likely to break down after that. But the first area to look, I think, where I would want to tag on a short position would be back up here. All right, I aggressively sold into this, but I had closed it out. Before we actually put in the low. So I caught a pretty decent move, but I ended up closing it out. Just because it was close enough, it was like, how much more are you going to expect to get? You're still going to probably get a bounce back down here. But this is your single print region. So if anything, look for failure here. Failure here, absorption here, and then that short opportunity might set up. You got to move back down to today's point of control. And then, you know, probably lower anyway. So single prints are an area on the chart where you only have one row of TPOs. So it's basically, I could show you how to find single prints on a candlestick chart in one sec. So here are the single prints. These are gaps, areas where price didn't really spend any time. These are usually areas where when you return back to them, they should cut off activity. If you have an entire region of them, like in a double distribution, like let's say this is a double distribution, but it's not perfect because it's not entirely single prints. But if you have an entire area of single prints, like let's say this was value, single prints, value, meaning you spent barely any time here. Usually it's like a long liquidation structure. So you built up a bunch of longs and then barred it down, leaving a gap. The beginning of that, returning back, is usually the area where you're going to look to see price get cut off. If you start accepting back within it, you'll see that usually it moves pretty easily back through. So it's the first important area to start focusing, if anything. So that's when you're looking at a TPO chart. If you want to find them on a candlestick chart, just go onto your 30-minute chart. So because it's a single rotation in the TPO, what it means is it's an area of a 30-minute chart where there is no wick candle body interaction between prior candles and a current candle. So just to zoom in, you'll see why this area is a single. So here, these are 30-minute candles. High, low, close, high of the previous. So where there's no interaction between overlapping candles is right here. Right? So this is a single print. No interaction. Right? Here there's interaction, so there's overlap, so you'd see a build up there. Here, there's interaction between two because one of them was able to make a low there. right? So you'll have a thicker area in the TPO. That'll be like this. Single prints will look like this, right? So that would be an area where you'd look to see prices get cut off. Now you could just roll from where we are, but the best risk to reward setup is as close as possible to that. Now, here's the thing, like in this environment, if you're swinging, so yeah, a single print by definition is a low volume node. The thing is, like, let's say that a ton of volume, no, it probably would never be the case. If you're looking at a volume profile, the single print should be lower, but it could show volume still. So this is like a high volume node. This is a low volume area. It does, right? It does. Most of the time, you're going to see corresponding low volume area with that. But it's not going to be as flat as if you looked at a TPO. If you look at a TPO, it's just going to literally be, let's say here's a bunch of value developed. Here are your single prints, the next area. Whereas if you look at a volume profile, high volume node, you might have a couple high volume nodes within there because on the way down, could have had a significant order transact, and it won't look as kind of uninterrupted and smooth. More often than not, it does. Like if you have, so for example, here's a really nice single, right? And keep this single in mind. Look at this. So this is a single print beginning. See that? Here are your singles. So when you're returning back to singles, it's usually an area that's going to cut off price. So here's the beginning of the singles on the way up, so a gap. These are usually the best areas to look to fish for longs if you're like in a trend and you're looking for a pullback at the edge of singles. So on the way down, that's the first gap that we really bounced from. Didn't do anything from here, didn't do anything at the prior point of control, but where price was cut off in the past, that's where we saw, a significant reaction. Here's the thing. So when I'm swinging, so I talk about how I enter positions quite frequently. A lot of times I market in, I limit out. I try to at least have one leg being a limit. 90% of the time I market in at least a portion of a position, even if I'm trying to get limit filled for a position for a swing, I'm still marketing in a certain amount of it, just to tag on a position, to make the position real, to sort of like, it's like having, a target to focus on versus not having a target. Like you're not focused at all. Like if you tag on a position, you're suddenly making the trade real, you're focusing a little bit more. I think it just narrows your focus a little bit. It definitely, if you don't have a bias, you'll have one after you put on a position. So here's the thing. Even if you accidentally put on a position, suddenly you'll see that they do studies where someone was accidentally put in a position or exited from a position, and people will post-rationalize why they did that, even if it was purely random and accidental. I think most people should scale into positions. So here's the example I'm trying to make. Let's say that, again, this is going to resolve the same way the previous December structure did. Consolidation, very clean. Break up, looks like continuation. Break down, we're right here. They resolved like that, right? Here's your wick. They resolved like that. So prior summer, this recent December, these failures have led to further downside. Now, it might take a little bit of time, but it's we're talking about a multi-week structure. It's not something that's going to move in a matter of minutes. And if it does put in a move in a couple of minutes, it's going to mean revert, right? So those previous levels, right, previous structures have had a bounce between failure. And, you see a throwback. So you want to try to sell the rally, right, in the best way possible. I already said it might come all the way up here. It might fail here. So you have a range of possibilities, right, where you might want to get involved. So the purpose of scaling in a position, so if you started, let's say, scaling in close here, is when you scale in, it's very simple. You're not wrong for the full clip, right? So the benefit of scaling into a swing, and swings are going to be noisy, right? Any kind of trend-based move, you're not going to just say, like, it's done because this price level was hit. The best traders are going to use some measure of volatility to signify that there actually has been a change. So what that means is, like, you might think that 30,600 is the most important level, but because you're trading in thin conditions, it hits 30,672, right? So just because it hit $72 above your level doesn't mean you should say that that trade is off the table. There's a lot of times with my lower time frame scalps where they're purely based on someone getting into position, and if their position is favorable for them, like if I'm trading on behalf of a really nasty trap setup, if their position is back, if they went from underwater to back to being in the green, my thesis of them being trapped and puking is off, right? So I'm just out of the trade. But for a swing, you got to give it room to breathe. So the purpose of scaling in is that when you just tag on a position completely, like say you're being impatient, you think the trade is going to go down. You're like, I think it's going to go down. Like I'm really certain, maybe it comes up here, but I want to make sure I'm in it either way. When you put on the whole position here, right when it starts moving against you, even if you're accounted for all this, you're wrong for the entire clip already. Why would you want to be wrong for the entire clip? So put on a little bit of a position, scale in so that at least you're only wrong for a small amount. There are some people that stop themselves out for portions as it moved against them instead of the total clip also. So you'll see that if people do clip in completely, they'll stop themselves out 25%, 50% as the position moves against them, so they're not completely wrong for a much larger move. And then reestablish the position when it starts to act favorably. So scaling in protects you from that. So that's it's a very obvious benefit. But the other thing is, if you start to scale in, at least if you start breaking down, you're already in the move. And you can start adding into this strength at that point. Right? If we see that, let's say you starting to scale in up here, market never comes up here, market never gets over here, and suddenly you're like, I didn't even meet all my criteria. But now we're back below today's low. Maybe you're starting at that point to add into this failure because the probabilities of this breaking down are much greater at that point. But the idea is you're not fully committed from the get-go. You're not forced in a position. It's like you think you're a really fast runner. I say, how fast can you run? You say I could run 15 miles an hour. I say, okay, let's throw the treadmill on 15 miles an hour. You said you could run 15 miles an hour, right? I mean, why don't you just take a fucking sprint up to it and try to stay on it? It's like, no, that'd be a fucking terrible idea, right? If you're slightly off at that point, it's very painful, rather than sort of slowly getting into position. Does this all make sense? So it's 12:30. We're like an hour into this. One other thing, I'd mentioned this on Twitter. There is something that I think that, and look, this is a nice bounce by the S&P right now. If we look at, here's the last couple of days. 1 sec. Let's put back on the. Here we go. Just weekly profiles. We built a nice base so far, right? Now we're back within. Trying to scale this so you guys can make sure I know you're missing the margin because of that. Okay. See completely. We're above yesterday. I'm trying to cap. It's hard to see because these are light profiles. Back above yesterday's value area high. Back above the prior day's point of control. The S&P looks good, honestly. So the S&P looks good, and it's in a very significant area because if we start to again reclaim those prior lows, right? So that low that we made on the way down into this base, that's really great tailwinds for BTC. So maybe with that help, let's say we poke up more, Bitcoin is able to give us a better short opportunity. Because I think yesterday's failure is pretty telling, honestly. I don't think we're looking at anything that goes back into last quarter's range in the near future. Hold on 1 sec. Let me just intermission you guys. I think my dog's barking for a reason. 1 sec. Sorry about that. I heard my dog barking. It sounded like she was barking at the door or something. I had to piss. What was I saying? Yeah, I'm much more bearish biased. So again, not a whole lot has changed. I think that's I guess a more important detail to hang on. All right, so I'm gonna wrap it up, but this is something that I was thinking of running by for this summer, and it would take me some time to kind of put it together. Um, is there anything I wanted to cover other than that? No, everything's getting wrecked. I already closed my wave short out. So someone mentioned yesterday I was talking about shorting FTM. I don't like to have multiple line items open. I talk about this a lot. I usually just move from trade to trade. So I ended up shorting my waves. I ended up closing my wave short out already. Just to go over this really quickly. It's a bear market. This bounced into resistance, right? Bounced into resistance, but it was actually holding the level. So it's kind of a dangerous short. You got Suzu talking about this, which is, depending on your opinion, might be a good thing or a bad thing. Might mean more downside. But the setup there was there yesterday. So, one sec. The setup yesterday that I was looking at was right here. So I ended up taking, this trade. So when we close this 30-minute candle back inside here, so this is just a really clean swing failure. And 9 times out of 10, when you have that kind of structure, if you're looking at like this as a range, so I'll put on a fixed volume profile just because I don't know where the point of control is here right now. There we go. Kind of lines up right around that halfway point. 9 times out of 10, this kind of setup is going to lead to the lower end of the range being visited. So the fact that we ended up breaking through and finding support back above now, not a good it's not something I would want to hold. So if anyone is like still short this, I think it's kind of dangerous. But the setup was there. So we had this close. I started shorting into the close, so I didn't just wait for this close to actually print. But then ended up closing this back down as soon as we took these lows. So here's the origin of the move from this little consolidation, poke up, took the lows, and the trade was done. So it was actually a pretty decent trade. This was, for me, it was around, I think it was around like 12, 13%. Not for the account, but obviously for the trade. I think that covers it though. Anyway, so they're letting them roll off. I don't want to really talk too much about the Fed or anything anymore. We have another FOMC coming up. We have CPI coming up. There'll be plenty of that conversation going around, and it's like I've talked about it in every stream, so I just feel kind of tired. They're letting them roll off. So what they're not doing though is using that capital to repurchase, which is of all things that could possibly happen, selling versus letting them roll off. It's the, I guess, more gentle outcome. And there's some talk that, again, what does some talk mean anyway? So everyone talks. That the QT will have basically the same effect as like 1 to 2 more rate hikes. So it's almost like people forget that markets are actually pretty efficient. They're not perfectly efficient. So the reason why this, the last year it's been like, hey, are they efficient? Are they priced in? Or are they not? Well, the markets try to price things in. They don't like take time off and not price them in. They try to. It's difficult to price in what you still don't have a concrete answer around though. So this is why you'll see that there's a lot of algo trading around the language that Powell uses, because everyone's trying to interpret what leading up to more recently when they said exactly when it was beginning, exactly for how much. It was like everyone's guess, right? So you're still seeing people guess when they're going to pull off. So they're trying to price these things in. At this point, knowing what what QT is, so the level of QT and how they're going to go about it, the market is going to be pricing it in pretty significantly, if not completely. Have you traded OP? OP or OPM, like other people's money? One of them, yes. OP, no. OPM is just an acronym that is from TradFi. So OP, no, I haven't traded OP. I just charted for the first time this morning. I think that it's an air drop, right? There's a lot of things that went wrong with it. I think all of them have their kind of day in the sun where they bounce significantly. I think it's, no matter what, it's going to make new lows. And let's just look at optimism real quick. So let's look at that ratio. Just say roughly. That is ugly, right? I mean, yeah, right? That's one sec. Oh, I just got rid of the calculator. That is, I'm trying to confirm that this is as ugly as it looks. Yep, it is. The market cap is 5% of the fully diluted valuation. So, I mean, look, so here's the danger with shorting this. That's a really low float. It's not a really low float like BTC, but it's a 9-digit float compared to your total supply, which is, 10 digits. So this can move very quickly. It's probably cornered by a significant amount of people. But it's definitely going to make new lows. That's for sure. Okay, so anyway, car unboxing. Yes, so here's what I want to do. I want to figure out a plan for this. I'm going to run some type of workshop or intensive course. I don't want to call it a mentorship because everyone laughs at Chimp Zoo's mentorship because he charges like, I mean, Chimp Zoo's he's an entertaining guy. He clearly was a great trader he was great enough to be on the leaderboard. I enjoy him. I think he's very hyperbolic. I think at least he puts his money where his mouth is. He has a mentorship that's like 0.6 or 0.8 BTC. Listen, I don't have any problem with anyone charging anything. It's a market, so we're all in markets, and then we get mad at people for charging for things. Do I think that that's probably a pretty steep? Yeah, but maybe he's catering to only really high-end people. And hey, if there's a price that people are willing to pay, like, I'm not going to poo-poo them. I think it's pretty high, but listen, not for nothing. It's probably going to be the first time I say not for nothing. If you told people like, hey, would you be willing to pay $10,000 to learn how to trade from, Druckenmiller, right? I was about to say George Druckenmiller, George Soros and Stan Druckenmiller. They were together, right? So people would be like, fuck yeah, that's really cheap. So there is something to be said for, him being able to advertise the fact that he was on the leaderboard, and that does mean something. And clearly he's been successful in the past. But either way, I don't want to say it's a mentorship because it's not going to be something that is, one, priced like that, and two, is going to be running for any longer than a week. What I want to do is organize something that's high level, that's not just like the course that kind of just is given away for free at this point and is, pretty much just the rudiments, a foundation to build off of. I want to run something that's high level, that's a small group, give people plenty of time to schedule for it, and is intensive. So what it'll be is probably like, maybe it'll be 5 days or 7 days or, of day after day of doing streams with like private stream, private call in, open discussion kind of Zoom thing, material given. And it's like, listen, there's not a lot that I could do during the bull market. I obviously have plenty of time, now between the time that my wife has so I shouldn't say my wife until we have our firstborn, but just something I was thinking of. Wanted to run it by you guys, and I'll update you. As far I don't like, you could tell like right now it's like it's just it's a whisper. It's not even a concrete idea yet, but it's something I'm thinking about. You'll have plenty of time to act on it, and I'll update with more concrete description and description and plans. And that's it. I don't think there's anything else I want to go over. I hope you guys have a fantastic evening. Stream summary will be provided, like always. I'm not going to be doing a call-in today because I have to go to that doctor's appointment, but I will do, let's say, we'll do another call-in maybe. Today's Thursday, so today's Thursday, right? We'll do another call-in on maybe Saturday. I'll update you guys. Call-in tomorrow either way. I was thinking about whether or not I'd fit in a third one this week, but tomorrow's call-in is good as stands. And until then, adios, guys. I'm going to be doing a vlog eventually. Something I want to do. So have a fantastic evening.